Hello, this is Scott Bankston, and I've had some questions about what is the difference between a dividend investor and a growth investor. I wanted to show you the differences, and I'm going to show this stock right here. This one's called AT&T, and I believe this is a great dividend stock. Let me show you. See this right here? This right here, that is the dividend. See if I can click it. Yep. See where it says dividend 49 cents, and see it pays right there, right there, right there, all the way up, and it comes up to right here. They raise it to 50, then over here it's 51, and then 52. And see, that's how you know it's good, because they keep raising the dividend. So you get a dividend every 3 months. When you get that dividend, you work to collect the stock. You want to collect the stock, collect the stock, collect the stock, because the more stock you have, the more dividend it pays. Like, you get paid this here per share. So every share you get 50 cents. So you want to get as much shares as you can get, and then you want to get what they call the DRIP. That stands for Dividend Reinvestment Program. And what happens when you get paid for the money for the dividends, it turns them back into more stock, and it buys more stock, and you just keep getting that put in. And what happens over your working life, this can really build up. I mean, it can really build up. And see, the thing what I wanted to make this video is, I'd hear people say, investing, get back in, stay in, stay in. Dividend stock, sure. I mean, it comes down, right down to where we are this week with the market. Well, why wouldn't you buy some more right there? So you'd buy low. It gives you more stock. The more stock you have, the more dividend you get. Now, let me show you a growth stock. Always like to go to this Chipotle Mexican Grill. Now, see, the thing about a growth stock, you always say, buy low and sell high. Now, that's what growth means. Buy low and sell high. Now, here's the dividend that it pays, 7 cents, which is not that much per share. 7 cents a share compared to, 51 cents a share over at AT&T. Plus, it's $940 a share, and it's come down quite a bit in the way the market pushes down. So this is pretty much a growth stock. So you have to find out what kind of investor you are. If you're a growth investor, why would you stay in this stock after you've bought it low and it went up to right here? You decide to sell it, and why would you stay in here just to watch it fall down? You're in it, and who knows how far it can fall. So if it falls down, you decide to sell. Well, you've made from there to there, but look how much a year you've wasted in not getting a profit. So you have to know, when you buy, you kind of have to know a spot where you're going to get out to make your money. So that is pretty much the difference between a dividend investor and a growth investor. Two different sets of rules. Okay, so make sure if somebody's talking about investing, and stay in, you hear them, stay in it. Depends on what kind of investor they are. If they're a dividend investor wanting to collect dividends, sure, stay in it. Stay in this market right here where we're at. I would stay right in, get more stock. But if you're a growth investor, you need to be out here, okay? That's pretty much the video that I wanted to tell you about. Alrighty, y'all have a nice day, and I will talk to you later. Hi, this is Scott Bankston again. There's something that I left out that I think is pretty important when you invest in dividends. There's a thing on there called dividend yield, and what that means is that is the amount of dividend per year divided by the stock price. And then when you get that number, I did it for AT&T. I added up these, and then I divided it by today's price. I came out at 6%. And you'll find out that that's a pretty good dividend that they pay. And of course, the dividend yield will change as the price right there changes. You know, if this goes up, this price right here, if it goes up, the yield, the percentage will be much lower. Or if the dividend goes up, I mean, it'll go up. You know, but that's how you know if you're looking for stocks that pay dividends. Look for the dividend yield, okay, and look to see if they've been raising the dividend every year, because then you know the company's strong and they're going to continue to pay the dividend. Alrighty, well, I just want to put this little video on there to tell you about. Alrighty, I appreciate it, and I will talk to you soon.